From this to this, the Residence Inn has come a long way since the chain launched in 1975. The most recognizable extended stay brand in the hospitality sector, Marriott is looking to replace the earliest prototype properties with a more modernized look, Generation 9.
The big difference between Gen 1 and Gen 9 is the design. If you look at the Gen 1 Residence Inns, it's more garden style, whereas now with the Gen 9, you're looking at probably at least a 4-story building.
The brand currently has dozens of early generation Residence Inns across the United States just waiting to be upgraded. That's why the Marriott team has been collaborating with Utah-based PEG companies, who is now in the process of acquiring and converting many of these aging hotels into fresh new multifamily communities.
These were owned by Blackstone Real Estate. They were divesting themselves of these older Residence Inns.
But the strategy doesn't end with the conversions. At the same time PEG turns the old existing hotels into apartments, the firm is also rebuilding a brand new fresh Residence Inn to replace the hotel they took out of the market.
It's net neutral in terms of the rooms in the market. We're not adding new rooms to the market. We have a base of business that's already there, so we're adding more business by increasing revenue and occupancy in a new hotel.
Fortunately for Marriott, PEG has been developing commercial properties for 20 years. The firm has assets in 27 states and provinces across North America and has received various awards from Marriott and Hyatt for excellence in hospitality. With a strong track record, PEG is now working on several Residence Inns across the United States, including this one in Sacramento.
This is going to be the main entrance where all the guests will come in. It's going to be the breakfast and lounge area, and this is going to be the fitness center. You can see that there's some nice big windows where you'll be able to look out as you're running on a treadmill.
We are also going to be developing one in Las Colinas, Texas, just outside of Dallas, a third one in Santa Fe, New Mexico, and a fourth one currently going on the north side of Boston in Peabody, Massachusetts. One of the things that makes this an interesting investment is the heightened awareness and increased liquidity chasing select service and extended stay properties that have performed extremely well through and after COVID.
It's considered to be the most profitable brand of the 30 brands that we have at Marriott.
And stats show a significant boost in performance in markets where an early gen hotel is replaced with a new one.
They show ADR increase of 36%, RevPAR increase of 49%, and intent to recommend scores, which is the basis for all of your guest scores, aggregated guest scores of 36%. So they're really well received by Marriott's loyal customer base.
PEG's in-house hospitality management company, PEG Hospitality Group, will operate the majority of the hotels upon completion. It's Marriott's best performing brand with best-in-class operations, and guests love it.
We've been staying at Residence Inn off and on probably over 20 years.
I honestly like the breakfast a lot. They've got a lot of options.
Residence Inn brand, hands down, is one of the best because you get everything.